All right, we are live, Gaurang. Hello,
Yeah, hi
everyone. I'm
Mithun.
Mithun here again. I have Gaurang from the Blockchain Council with me again today. Welcome to our second session as part of the CoinDCX knowledge series in partnership with the Blockchain Council. Last Friday, we spoke about technical and fundamental analysis, and today's session is going to be on technical indicators. Uh, I've been looking forward to today as well because I don't know how many of you know, but I'm kind of new to crypto as well. So these sessions for me are kind of a selfish motive for me to learn as well by organizing these sessions for everyone. Apart from my conversations that start with Gaurang about half an hour before the sessions where we discuss everything from the media to politics. I think I really enjoyed last week's session as well, and I hope everyone will enjoy today's session as well. An hour before the session where we discuss everything from the media to politics. I think I really enjoyed last week's as well, and I hope everyone will enjoy today's
We've
done
done
some
some
work.
work.
We know the lighting and the sound wasn't great last week, but we tried to fix some of that this time. So without any further delay, I'm just going to hand it over to Gaurang because we only have an hour, guys. Gaurang, over to you. I'm going to bring your screen up and I'm going to go in the background.
Hi everyone, welcome to the new session. And today we are going to talk about technical indicators. But before that, I just recap last week's session. I find today's session way more interesting than the previous one. As you know, the previous one was sort of laying the groundwork for what we are going to cover today. Very briefly, last session we talked about candlestick chart. Yes, how candlesticks can help us glean more information at a glance compared to a traditional bar graph. We looked at the differences between technical and fundamental analysis, and how technical analysis remains the same for regardless of the asset class that you're holding in, whether it is commodities, whether it is equity, whether it is cryptocurrency. So today we are really going to build on that section, and we will go ahead and look at technical indicators. And technical indicators are, very powerful tools that help us, combine a lot of the information that we have from the candlesticks. So just as a quick recap, this is all the slides we covered last week. So we briefly talked about fundamental analysis in crypto trading. We looked at the concept of uh, intrinsic value, the target market, deterrence to entry, and various other factors that you need to consider when you are planning to invest in any cryptocurrency. One important factor was that of demand, the different tokenomics and utility of the token that they have created. As we saw, like in the last run up in late 2017, where companies were just creating all sorts of ICOs without any regard for whether they needed a decentralized system to even provide that service to their users or not. We talked a lot about how the value of a crypto project increases as with its use case reaches more and more people. And we talked about the concept of market cap and why it is a better metric to evaluate different cryptocurrency projects on compared to just the price of the token. As the circulating supply is also a very big factor when it comes to the price movement for any cryptocurrency. The example we took was that of Ripple, where over 50% of its 100 billion tokens are locked with the Ripple Foundation. After that, we reached technical analysis and crypto trading, where we compare technical analysis to fundamental analysis, where instead of looking at all these different parameters such as balance sheet, profit to earning ratios, government policy, currency rates, etc., the only thing that technical analysis is concerned with is price history.
Here, the basic assumption is that the market price of any asset has taken into account every known and unknown variable to us at any given point in time, and that history repeats itself of technical analysis. Then we talked about candlesticks, candlestick charts, and how some information about the buying and selling pressures in the market. So we talked about spinning tops and dojis, which represent indecision in the market. Marubozo, which was a signal that a strong move up or down may be coming. Then there were multiple candlestick patterns that can help signal the reversal of a trend. And today we are going to expand on that idea of how to identify a trend so that you can know what a good entry and exit point could be for any market. And that actually brings us to today's topics, that is technical indicators. So, broadly speaking, technical indicators are computed using some mathematical formula that help us predict the price of an asset. Uh, these technical indicators can distill a lot of information from the price charts and help isolate the signal from the noise, so to speak. Um, so some of the indicators that we'll be covering today are trend lines and channels, support and resistance, moving averages, RSI, Fibonacci retracements, and Bollinger Bands. So I really, all right. I think I'm getting some echo from my end. So let me just connect my earphones real quick. All right. I have my earphones on now. I hope this is a little bit better. Can you just give me a message in the chat, Mithun, if the audio has improved?
Gaurang, we can continue. The sound is much better now. We got a few confirmations as well.
Cool, cool. All right, continue.
Gaurang, we can continue. The sound is much better now. We got a few confirmations as well.
Great, great. Yeah. So I'm just gonna continue with the slide deck. And so what I was saying was that I enjoy technical indicators a lot because ultimately these technical indicators can help me make better trading decisions without knowing anything about how they are computed, what asset I am trading, you know anything. I don't need to know anything. All I need to know is some very basic things about how to interpret a technical indicator correctly. Just 1 second.
I think this would be better audio-wise. So yeah, I was just saying, I like technical indicators because they don't require me to have any other knowledge about the asset I am trading. What the mathematical model is behind finding a particular technical indicator. All you need to know is just very basic things about what these technical indicators are telling us about the buying and selling pressures in the market, and that can be gleaned from just uh, some extraordinary price movement at a given market interval. So we will see what all of these things mean in just a little bit. And I think a good place to start for that is trend lines and channels. So, if you talk to any technical indicator, they'll tell you that like all of technical analysis just begins from trend lines, and identifying, or learning how to do trend lines properly is just the foundation of doing any good technical analysis. So, trend lines are just easily recognizable lines that traders draw on charts to connect a series of prices together, or sort of to draw a best fit line for the data. This resulting line is then used to give the trader a good idea of the direction in which an investment's value might move. And basically, a trend line is drawn over pivot highs or pivot lows, which we'll see in just 1 second what they mean. And usually by connecting a minimum of 2 points by a line, right? Uh, these lines can have varying degrees of slopes and length, and this can also help us make some, uh, you know, draw some information about these lines and the movement of the market. Uh, so like I was saying, to create a trend line, an analyst must have at least 2 points on the price chart. And there is some debate around this. Some people prefer at least 3 points to be connected. And the rule of thumb is just that it's okay to cut through the upper and lower body of the candle, but the main body should never be cut. And I think this will become clear as once we move to the terminal in about a few minutes to demonstrate drawing these trend lines. Um, and just a follow up to the trend lines are the channels. And channels are, just drawn by drawing a parallel line to the trend lines that we first drew. So, for instance, like in the previous example, let's say we have these trend lines, which are okay. Let's say we have this first trend line, which is showing us a downward momentum in the market. And if you pay attention, it is drawn by connecting the high of the recent swing high to the recent low, the next highest high. And what this is telling us is that, like, during this time period, overwhelmingly, the price was making lower lows consistently. So you might see some price movements in the, some green candlesticks in this period, but overall, still the trend remains negative. So it would make more sense to, short the market instead of trying to long the market. All right. And like I was saying, channels can just be created by drawing parallel lines, also taking care that you're not cutting through the main body of any candle here. Just trying to keep as close. Yeah. So yeah, Abhay has a very good question. Please draw a trend line in a chart, and Abhay, we'll just come to that in 5 or 10 minutes after we're done with some more slides. So yeah, continue. And what these channels can tell us is that anytime you reach the top of a channel, that might be a good position to sell your position in the market. And anytime you reach the bottom end of a channel, that might be a good buying zone, right? So it just basically represents that at the top of a channel there are a lot of people who are ready to sell, which means the price will find it difficult to break through this channel, like the upper band of this channel. And similarly, at the bottom band, there are a lot of buyers. So again, the price will find it difficult to move below this particular range. So then we have the concept of support and resistance. And support is the level where price finds it hard to fall below, and until it fails to do so, and it bounces back up from this point. Um, Resistance, on the contrary, is the top red line, and it represents a point where it is impossible to crack, and there is just so much selling pressure that price is not able to climb above this, right? So one important thing to note about support and resistance lines is that a broken support becomes a resistance and a broken resistance becomes a support, right? So these two lines, they just reverse their roles once they are broken. And a lot of confusion that people have initially when they are looking at support and resistance lines, or when they're trying to draw them themselves, is that people think that resistance lines or support lines get stronger with every test. That meaning, like so if you look at this example, you have the first test of the resistance line at the very beginning, and you see that the price is not able to break through this point. So it just starts a downtrend for a little bit, keeps keeps going down until it tests the support line for the first time. Then it is not able to go below the support price, so it starts a small upward rally before coming back, not even going all the way to the resistance line, and just coming back for a second support test. Now, the common misconception that I was referring to is that people think because the support line is not being broken again and again, it has to be getting stronger. But that's not actually true, because if you think about it, what it actually represents is that there are a lot of buyers present at this price level right now. So, anytime the price gets around this range, so for instance, like if it is Bitcoin and currently like this support line represents a $10,000 price tag, it means that a lot of people are ready to buy Bitcoin at this $10,000 price point. So what actually happens is, once the price tested this region the first time, a few of those buy orders, all those people who wanted to buy it for $10,000, some of those buy orders actually got filled. So the second time there are fewer buyer orders, and therefore the support line is weaker. Same is the case with resistance lines. Instead of buyers, we have sellers, and some of those sell orders get filled, and that basically just means that the probability of breaking a resistance or a support line increases with every subsequent test, which is a misconception that a lot of people have. Cool. So let's just cover one more concept before moving on to the trading terminal, which is that of moving averages. And this will also cover MACD, which is the more useful of the technical indicators. But moving average serves as a good knowledge base for understanding MACDs. So very simply, the moving average is a simple technical analysis tool that smooths out the price trends by filtering out the noise from random short-term price movements in the market. I hope that makes sense to everyone. You take the average price over a particular period of time, and if you look at this example below, you have the blue colored line going through, intersecting with the candlesticks at every point in time. So the average, can be specified for any period of time. It can be 10 days or 20 minutes or, X number of weeks. It doesn't really matter. And the most common application of moving averages is to identify the trend direction. So for instance, like if you look at the slope of the moving average line, it will tell you whether you are in an uptrend or a downtrend. So this is just connecting it back with the previous concept we saw for trend lines and channels. So if you're not able to, immediately look at the chart and tell whether you are in an uptrend or a downtrend, in that case, moving averages can be quite helpful, as you just, compute the slope of the moving average line at any point, and then you know whether you're in an uptrend or a downtrend. So when asset prices cross over their moving averages, it may generate a trading signal for technical indicators. And like I was saying, these moving averages ultimately form the basis of the MACD technical indicator, which is the moving averages convergence divergence indicator that we will cover in just 1 second. Just before we can move to MACD, small note that we have two different types of moving averages, which is the simple moving average. for example, if you have a simple moving average of a 5 day period, it's just you add up the five most recent daily closing prices and you divide them with five. I hope that makes sense. It's very standard. So you take up the price of the last 5 days, you add up the price and divide it by five. That gives you the simple moving average of the last 5 days. Um, Again, this helps to smooth out the data, but it is less resistant to more recent price changes. And for that, we have an exponential moving average, where each average is connected to the next, and the calculation for exponential moving average is a little bit more involved. And the idea behind it is that it just applies more weight to the more recent price movement. So, for instance, like I'll show you guys this. When we plot the 50-day simple moving average and the 50-day exponential moving average on the same chart, we'll find that the exponential moving average reacts more quickly to price changes recently than the simple moving average does. And the reason is that we are adding a lot more additional weight to the more recent pricing data. So I think we have, yeah. So I'll just quickly cover MACD and then we'll move to the TradingView terminal. So like I was saying, MACD stands for the Moving Average Convergence Divergence Technical Indicator, and it's what's called a trend following momentum oscillator that shows the relationship between the two moving averages of a security's price. Mathematically, it is computed by subtracting the 26 period exponential moving average from the 12 period exponential moving average. This gives us what's called the MACD line. And we also have one other line, which is the 9 day exponential moving average called the signal line. So the interaction of these two lines can help us make some very, very powerful trading decisions. And let's just go take a look at that right now. So I'll just share my TradingView terminal. So we can put some of the theory that we have covered to test. Cool. So I think my TradingView terminal is visible to everyone now. So I'll start by drawing things in sequence. If you, so this is, I am at the daily chart right now, and this is just looking at the last few months of price movement for Bitcoin. Just right off the bat, we can see we had a huge rally starting in late July, all the way to the beginning of August. And we had a recent price pullback around, from the $12,000 range back to like the $10,000 range. So this is giving me a very good indication that where I should be drawing my support and resistance lines, for example. But before that, let's actually just go look at drawing trend lines. So I'm here in my TradingView terminal. I have selected the candlestick uh, pattern for my chart so that I can draw my trend line. So I just pick out the trend line option from the left navigation panel, and then let's say I am at this. So I can consider the period from the 7th of uh, September to the current 19 September range. And even just looking at it from the naked eye, we can see that we are sort of in an uptrend. But sort to just kind of validate that with the trend line, we can start by connecting the lowest of these two candles here with the most recent candles. And the only thing we need to take care of is that it's okay to cut through the wicks of the candle, but we shouldn't be cutting through the main bodies of the candle. So I think I'll choose this red line as it gives me a lot of room in the y-axis to pick out my point. And ultimately, I want to connect it to this other red candle here, which I can do like this. And I just have to be careful not to cut through this green line. So for example, this would be an example of a trend line which violates that rule, and therefore like I need to draw something else. So I need to like pick out my starting point a little bit lower so that it actually doesn't do that. And I guess, yeah, so this is the bare minimum of a technical, of a trend line that I can do, because any closer to this candle, then I will have to cut through the main body, and that wouldn't work. So just to draw one more trend line in the past, I'll go look at some, you know for example, this would be another good example. So here again, we had a low here, and then I can actually connect, uh, more than one candle. So if I just draw it till here, this region on the map also represents an uptrend, and after this line was cut, for example, by this huge red candle, this market has remained in a position of indecision for quite some time. Cool. So again, continuing with this example, if I were to draw a channel here, I would again have to make sure that it's as close to this line as possible, and that the line is, parallel to the one that I just drew. So just based on a very simple strategy for trading, you can see that, like as soon as the price reached the top of this channel, we saw some small pullback here, and like as the price was reaching the bottom of this price channel, we saw some positive movement in the price. Cool. So that's the trend lines and channels that first covered. Next up, I want to look at the support and resistance zones for this map. So uh, just 1 second. Right. So this is the bottom of my uh, support line, and I would mark the top somewhere around this region. So one interesting thing that you guys might notice is that these support and trend lines tend to occur around regions of round numbers. So for instance, the bottom of the my price band is around the $10,000 price mark, whereas the top is around the $12,000 price mark. And the reason for that is that these numbers tend to be important psychological barriers for people when they're trading. And that's why we see a lot of price action around this point. So we can see that the price is within this band. For the top band, although I would like to bring it down a little bit, somewhere around this, because just 1 second, yeah. So we can see like the price has tested this price region many more times compared to the one I drew earlier. So this is almost the $12,000 price range. So this is a $2,000 price range that I'm seeing, like $12,000 to $10,000. We saw the resistance line being tested first time around 2nd of August. It wasn't able to break through. Then we had the second test about a week later, 10 days later, at on 11th of August. And this is very interesting. Like on 17th of August, the price was actually able to make a clean break over the resistance line. And ideally, this would be a very positive indicator that the price is going to go up. But as is often the case, if you make your trading decisions based on just a single input point, a single indicator, you might be making some grieve error. And it turned out that this indicator was fake, and we had a small price rally up until this point. We again had a uptrend till this $12,000 range, and after this we had a massive dump, right? So this is one of the very important things that we need to keep in mind, that you never want to make your trading decisions based on just one piece of information. So let's see like how we could have avoided falling into this trap of buying on 17th of August. So that brings us to the first technical indicator that we have. And to add this indicator to my chart right now, I'll just go to the indicators and strategies button, and I'll go look for moving averages. So I'll just draw the moving average first, and then I'll add the exponential moving average. Cool. So very simply, this is the simple moving average. This is for a 9-day period, as you can see here in the the small widget that I get for moving average. So by default, it takes a look at the 9 days because I'm on a daily chart, and you can see how it smooths up the price data. So first of all, on 27th of July, we had a huge price movement up, and we still there was a lot of continuity with this moving average line. you know it helps keep things in perspective. And again, when we had this huge price movement downwards, it didn't immediately decrease with the price. It gradually came down once it became clear that the price movement has was significant. And that is the reason that why moving average is called a lagging indicator, because it might take some time for the information to be represented uh, using the moving average indicator. So I'll just add the other moving average, which is the exponential moving average. And the exponential moving average just gives more attention to the more recent price action. So again, we are looking at the 9-day exponential moving average. So very different, and that's why like it is difficult to make good predictions based on moving averages alone. So to remedy that, I'll just go ahead and add the thing that is actually usable, which is the MACD indicator. Cool. So this is the first technical indicator that can help us make decisions about the market. So this brings us to the first indicator, which is uh, like I was in the beginning of this session, I was telling you about, like I don't need to know anything about MACD, how it is calculated by subtracting the 12-day exponential moving average from the 26-day moving average. How the MACD line and this signal line are calculated, but still I could make very good trading decisions based on this indicator. So let's see. So just going to zoom out a little bit. And one more thing is that you can configure a lot of the properties of your MACD chart by going to the properties section. My MACD line is shown in blue and my signal line is shown in yellow. So like I briefly talked about how these are calculated. The MACD line by subtracting the 26 period exponential moving average from the 12 period exponential moving average, and the signal line is just the 9-day exponential moving average. So even if you guys didn't know about the mathematics of how it is computed, the only rule I want you guys to remember is anytime the signal and the MACD line cross below this zero line, right? So if you look at the indicator that's at the bottom, so at the top you have the price and at the bottom you have the indicator. So this is the zero line which is used for reference. So like I was saying, anytime that these lines cross below the zero line, that is a signal for buying the asset. It represents that the asset may be oversold. And any time that the two lines, MACD and signal line, cross above the zero line, that is a signal for selling the asset. So let's see how many times this MACD indicator would have given us the right signal in recent times. So let's see the first so the first you know intersection I'm seeing is on 11th of August. So 11th of August, what MACD line is saying is because these two lines intersected above the 0 point, this is a signal that I want to sell it. So on 11th of August, the price was in the $11,500 range. So if I had listened to the MACD indicator, I would have been able to catch this price movement from 11,500 all the way to this $10,000 price range, right? And just based on that same signal again, it intersected below the zero line on 14th of September, just 4 days ago, and that was a signal that a price movement up may be coming. So right now, MECD is telling me that it is a good time to buy. But we don't have to trust MACD right now. We can just take a look at some more examples in the past. So another intersection I am seeing is on 11th of May, where at the bottom of the rally, it again the indicators intersected, and again the intersection happened above the line. So what this would tell me ideally is that now I should sell Bitcoin. So the price on 11th of May was 8,600, $8,700 range. And if I had listened to MACD and sold, then that would actually have been a bad trade because the price, consistently has been in indecision or a, small positive move up. Right. So that is one thing that I wanted to convey to you guys again, that you can't be making trading decisions just based on one technical indicator. Like I discussed in the previous lecture as well, the news cycle has a lot of effect on the prices of these assets, and technical indicators are just one of the variables that you need to consider when you're making a trading decision. So let's just take a look at one or two more examples of MACD. On 21st of March, the the MACD and signal lines intersected below the zero line again, and this in MACD terms is a clear buying signal. So price on 21st of March was around the $6,000 price range, and from 6,000 Bitcoin went up all the way to $10,000. So that's at least a 40% price increase over a period of a month. So this is the power of the MACD line, that it is such a simple indicator but can help you make some very good decisions. One last example that we can look at is on 15th of February, the MACD and signal lines again crossed, this time above the zero line, meaning that you should sell the asset right now, or you should open a short position, whether it's in the futures market or the options market. So if you were to sell the Bitcoin around this $10,000 price range on 15th of February, you could have been able to catch this entire price movement down to 50%, right? So if you opened a short position, you would have made $5,000 for this price movement in the downward direction. I hope this MACD lines use case made a lot of sense to you guys, as the trading strategy around MACD is very straightforward. That's why this is one of my favorite indicators, that it keeps uh, things simple and still helps you make some very good decisions. All right. Next up, we have RSI. So RSI is what's called a momentum oscillator that measures the speed and change of price movements, right? It's displayed as an oscillator, which is a line graph that moves between two extremes, which is the value of 0 and 100. And traditional interpretation is that values above the 70 mark point represent an oversold asset, something that the price might go down now. And below 30, it means that it is overbought. My bad, I got the terms mixed up. That means it's oversold and the price would go up now. This will make a lot more sense when we look at an example. Um, yeah. So the actual computation for RSI is actually quite complex and beyond the scope of this small webinar we have right now. But you can find very good resources for that online. Here I'm just going to focus on how to interpret RSI. So I just go back to my indicators and strategies and open up the RSI tab. Cool. So it just loaded up. So again, bringing it back to the time frame of the last few months, we'll see like how many times RSI got it right and how many times uh, RSI got it wrong. So I would want you guys to pay attention to the bottom of your screens where we have RSI right now. And you can see that we have a graph that is oscillating between values from 0 to 100. And the shaded region in purple represents the important indicator points, that is the values of 30 and 70. So when as a general rule of thumbs, again, like I was telling you guys, let's say I don't know anything about RSI, let's say I don't know anything about Bitcoin, and my only reference point is the graph that you guys are seeing at the bottom. So what this RSI indicator tells us is, anytime the RSI signal line, it crosses the level of 30 from below, that is the time you want to buy the asset. And any time it crosses 70 from above, that is the time you want to sell the line. Does that make sense? So let's see. On first of all, on 17th of March, or let's say 18th of March, RSI crossed the level of 30 from below. Can you guys see? On 18th March, then the price was around $5,300, and this, according to RSI, is a buy signal. So if you bought Bitcoin for $5,300 on 18th March, then over the course of the next 1.5 month, you might have been able to catch this entire price movement up all the way until RSI crossed the value of 70, which happened on 29th of April, right? And on 29th of April, the price closed at $8,700 per Bitcoin. So $5,300 to 8,700. That's almost a price increase of $3,500 for about a month of movement. So not a bad amount of profit to be made from a very simple indicator. Next up, we said that anytime the RSI line crosses 70 from above, which is happening on 9th of May, you want to sell the asset. So you could have sold Bitcoin if you had Bitcoin for from an earlier investment. You could have sold around the $9,500 rate, but in this case, the effect was not as clear, not as pronounced as it was in the case of that previous cross we had. So, like, that brings us back to that point I was trying to convey throughout this entire lecture, that these indicators are just, what, as the name suggests, indicators. They are not guarantees over the movement of the actual asset, and therefore always should be taken with a grain of salt. So you combine these technical indicators with your own understanding of the fundamental sentiment around whichever asset you are trading, and also other in conjunction with other technical indicators. So let's just take it one or two more examples. Uh, okay, one more thing I want to cover about RSI is that this in this region of the 50 mark line. So I'll just draw a line here. So okay. So this line that I am hovering my mouse at is the 50-point line, and if the RSI line is hovering around this region, whether it's from below or above, or even if it's intersecting the 50 line, that generally indicates indecision in the market. That is when RSI is telling you that there is equal amounts of buying and selling pressure, so the price is not moving in any particular direction. And yeah, this is another signal that traders find useful. So, like, again, in the entire region from 10th of May all the way to 20th of July, which is like 3 months of trading, the RSI line was hovering around this 50 point mark, indicating that there was indecision in the market, and the buyers and the sellers were just consolidating the price around this region. So there wasn't a clear buying pressure or a solid selling pressure that can swing the price, which would give you an opportunity to make a profit, whether through a short call or a long call. Cool. So yeah, that's the basics of RSI. I think we have time to cover one more indicator today before stopping for a quick Q&A related to anything we have covered so far. Cool. So let me just head over back to my slides, and we can bring the TradingView terminal back up as needed. Cool. So we covered RSI briefly. It's a momentum oscillator that measures the speed and change of price movement. RSI oscillates between 0 and 100 and is considered overbought above 70 and oversold below 30. The default lookback period is 14, but this can be changed on your terminals. And just very roughly, it is calculated by calculating the momentum of the ratio of higher closes to lower closes. So the more the currency moves up, or any asset moves up, the more positive is RSI. The actual calculation for RSI is a little bit involved. It is quite complex. So you can look it up online if you're interested, and I encourage you guys to do that. But like I was saying, just to make trading decisions based on RSI, that information is not absolutely essential. It's just calculated using the average price gains and losses over a given period of time. The last indicator that I will cover today is Bollinger Bands, and we can leave Fibonacci retracements, which is one of my favorite technical indicators for next time. If you guys are familiar with Fibonacci numbers, you guys might be familiar with how these numbers are found everywhere in nature. So it's only natural that you would also encounter them in trading. And we can just because this will take a bit longer than we have today, we'll just try to cover this in the next session. Bollinger Bands are a little bit easier to understand and make. So let's just cover those right now. So Bollinger Bands are shaped by a center band with two external groups. The center band is a simple moving average, or it can be an exponential moving average. And the top and bottom bands are simply calculated by adding and subtracting the two standard deviations from the price, right? So standard deviations help you capture any of the noise in the data. So regardless of how volatile an asset has been, 96% of the volatility will be covered within this price band. So if you have a very volatile day in the market today, then your band tends to expand, and during periods of consolidation when there isn't a lot of movement, the band is a lot thinner. And as in this example, you can see that the very simple strategy for trading Bollinger Bands, like I discussed the strategies for trading MACD and RSI, is that anytime the price makes a clean break through the upward band of the Bollinger Band, that is a signal to buy, and anytime there is a clean break through the bottom band, that is a signal to sell. Hope that makes sense. And this is the example that we can take. So first up, on middle of April, you have the first time price is making a clean break across the top band, and we see a small price movement in the downward direction because of that. Next, on this would be around the beginning of May. We have a very clean break, very long green candle that makes a clean break over the top band. But interestingly, we don't see a corresponding price movement in the downward direction. So again, just to reinforce that an indicator does not guarantee any behavior. It's just a helpful tool to gauge the buying and selling pressure using some mathematical formula. Cool. One last time on this is, I guess, 13th or 12th of May, we have another clean break, and this time actually we see that price movement in the downward direction. So just immediately after this clean break, the price started to go down. And what this is showing is simply, that on days when a candle can break through the Bollinger Band, it means that that day the price movement was extremely volatile. That has no basis in the past, and it is unlikely to sustain. So that can give you a very good indication to open a short position or a long position, based on whether the top band was made a clean break through, or whether it was the bottom band. So yeah, I hope this made sense to you guys. I think we have just a few more minutes to do a set of small Q&A questions. So yeah, for sure. Yeah. So Away is saying that if we can, switch over to the terminal and take an example of a lower time frame. Absolutely. This is one of the things I also wanted to cover. So let me bring up my terminal window once more. Cool. So I hope my terminal window is visible right now. Yeah. So like I was saying, you can select the time frame of your chart by selecting the hourly or minutely or daily windows from this top navigation band upon trading view. So for instance, let's take a look at the 30-minute time frame, where every candle represents the OHLC, which is the open, high, low, and close pricing data for a 30-minute window. So as you can see, like this is all the price movement of today. So the market, I guess, started out somewhere at the uh, at the top here around the $11,000 mark, went all the way down to $10,700 mark before recovering to $11,000 again. And let's see if RSI is helping us here. So here on 16th of September at around 10 p.m. and I think this is UTC time, so you guys can adjust based on where you are watching this. We had the first break like of the 70 mark from above, and what this RSI is saying is here you should have sold Bitcoin at around $11,000. And in fact, over the next 24 hours, which is around one day, the price went down by almost $400, right? So that's a considerable price movement for a very small time window. And since then it has been hovering around the $50 point mark range, so it's showing indecision. And let's just add one more indicator here before wrapping up for today, and that is the MACD indicator that we have looked at. We will cover the Fibonacci retracements and Bollinger Bands in more depth in the next session. So I'll just add MACD. Cool. So again, it's just loaded again. So on 17th of September at 1 a.m. in the morning by UTC time, we had the crossover of the MACD line and the signal line above the zero line, right? So in MACD terms, that is a very clear indication that here you should have sold it, and if you had, then you would have been able to catch this entire price movement in the downward direction, because the second crossover happened below the zero line almost like 24 hours later. So you would have like bought here around the $11,000 price range, and I meant sold here, and then closed your short position around this point at 7:30 UTC time at a profit of almost like $300. Very cool. Next time we had the crossover above the zero line, we actually didn't see much of a price movement in the downward direction, and that also is one thing to consider is how the level is where the crossover happened. So like the closer it is to higher it is, the more likely it is that you would have a downward direction price movement of significant um, um, price movement. And since the this crossover is very close to the zero line, this can be interpreted as a less powerful move down. So we had two crossovers recently, both above the zero line. So generally this is telling us to sell it right now, and but since it is very close to the zero line, it might not be a very clear signal. Cool. So I think that brings us to the end of the session. Yeah, just one quick question before we end. Manhar has a question. What does the line in the center of the bands indicate? Manhar, if you're having a crossover around the zero line, that just means that you can ignore this signal as there is a lot of indecision in the market. Cool. Oh, I think Manhar was asking this question about the Bollinger Bands line, and I just saw this in the comments. The line in the center of the band is the simple moving average, Manhar. It is the exponential moving average of the 9-day period, and it is just for smoothing out the price data. And the top and bottom bands are computed using the standard deviations from it. Yeah. Yeah, cool. So the answer is that it's just the simple moving average. Cool. So yeah, I think that brings us to the end of the session, and I hope you guys learned a lot. I had a lot of fun, giving the session, as technical indicators are some very powerful tools that can filter out the signal from the noise. So yeah, I hope you guys can join us for the next session as well, where we will look at some more Bollinger Band examples and even Fibonacci retracements and some more information regarding derivatives and options trading, futures trading, all of that. So thank you guys for joining the session, and you guys have been a great audience. Thanks for participating. Joining the session, and you guys have been a great audience. Thanks for participating.
Thanks a lot, Gaurang. I know I'm a little delayed after Gaurang is finished because I think I'm experiencing some lag on my side. So I'm just kind of giving it a bit of a gap before I jump in because there's a lot of overlap in the sound.
Joining the session, and you guys have been a great audience. Thanks for participating.
Thanks a lot, everyone, for joining in. Like I said last week as well, it takes a lot of motivation to come in and join on a Friday evening for any sort of a training session or a learning session, I guess. So thanks a lot again for joining in. Like we said, we'll come back again next Friday evening. All right. We'll go a lot more in depth into Bollinger Bands and Fibonacci Bands in the upcoming session along with derivatives as well. I said it last week, I'll say it again. We'll come up with some topics based on some research that we've done. But if there are specific topics that you want us to cover, right, or go into more depth on, please leave your suggestions in the comment section of this YouTube video, and I promise we'll pick it up. All right. Thanks a lot, everyone. It's great to have you again here, Gaurang. So hopefully we both kind of recovered from a health scare this week. Next week probably will be on the ball again and be back here on Friday. All right, guys, I've also left like a ticker at the bottom of this screen. If you are interested in taking up like a certification with the Blockchain Council, you can visit the DCX Learn page and look up the certification courses there. For users of CoinDCX, that is active customers of CoinDCX, there's also a discount running on these courses currently. We'll be sending out the information to you on our community forums and our email soon. So please look out for that email and that message as well. All right, guys. See you next Friday. Thanks a lot, Gaurang. Have a good evening.
Have a good evening. Bye bye.
Bye.